Hello friends, this is your host Rakesh Kumar again. In the previous video we had discussed the chart pattern which is called as a rectangle. See, it is a period of congestion between an uptrend or a downtrend, and it is also called as a continuation pattern. We will see a few examples of the same pattern which we have discussed in theory now in the real market. Just to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now to get the notifications of the latest video uploads. And if you find this video useful for you, then please consider pressing the like button which is there below the video.
But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started.
Okay friends, the first example of the rectangle that we have is of Australian dollar versus the US dollar. This is a random example I have taken out from the history. I will just explain you how I take it. You open any chart and then you go to the JForex platform and you click on this pattern analysis widget. Once it is opened, I have just taken the historical example, so I open the current instrument history and then I look for any rectangle formation. There are so many formations here. You can look for any formation which you want. I wanted to explain the rectangle, so I have taken the rectangle. Now say I take this rectangle, let us see where it goes. And it has come to this place, and this is I think the same example which I was talking to you. Yes, it is the same example, so I will try to explain it here now. Now if you remember, what we have discussed is that for rectangle pattern, first thing that we need is a trend. Now you see, for triangle we need, first thing that we need is a trend. So here, do you see any trend here? Yes, I do see a trend, because the price is making lower highs and lower lows here. After this high, the price has made a lower high here, and after that it has made even a lower high here. So the price is making lower highs, and okay, trend is established. After that, what we need is, we need 4 points. Now those 4 points, if you remember, were 2 highs and 2 lows. Okay, the 2 highs approximately at the same level and 2 lows at approximately same level. Now after that, I had told that there should be duration. Now 3 months duration, I told that it is supposed to be there. You should be looking for ideally for 3 months duration, but a bit less than that is acceptable, but very less than that is not acceptable. Now from here till here, we will see from this high till this break how many days are there. Ideally they should be 40 days, 2 months, 3 months, but here we have only 32 days. The break is there, break is valid, it was retested, the target was achieved, but this cannot be treated as a robust break, because you see, after the breakout the price came back again to retest this rectangle formation after a long time, even after taking the targets. So if this would have spent more time in here, then the targets would have been more, or you can say the continuation would have been more. We'll try to go for another rectangle and let us see if it happens. No, it is same example. So again same example. We need a rectangle with the solid. Okay, we'll see the another example from the GBP JPY. You see here, the price was in an uptrend from here. After making this low here, the price started its uptrend, and during this uptrend the price made a high here first, then it made a low here, sorry, not here but here. Then it started making highs at approximately same level. So these highs at the same level constituted the highs of a rectangle pattern, and these two lows made the pattern even interesting because now it became a full rectangle. Now after the breakout, you see how much time it has spent from this high till breakout. We have 97 days, which is more than 4 months of time, and it was a very nice pattern formation. After the break, you see the price went higher and then again came back to this level to retest this level as a support. Now if you would have entered the price here, if you would have entered here with a small stop loss below, and the target of the pattern would have been equal to, what is the target of the pattern in this case? The target of the pattern is equal to the height of the pattern. Now this is the height of the pattern. Now this is measured from the breakout level. Let us see from the breakout level, did we achieve the target? We need to see it by extending it to the right and then putting it at this level. Yes, we almost achieved the targets. We achieved the targets twice, and then eventually the pattern started a downtrend. So you see, we fulfilled all the criteria. The duration was more than 4 months. The breakout direction was in the direction of the trend, which we needed for most. And then we need a breakout confirmation, which was confirmed by the candle closing higher than this previous two highs. Candle closed higher than this, and then after we needed retest, which actually happened after the pair came back to this level. And then after finally we needed a target, and target was achieved, which was equal to the height of this pattern. Now, but this is not the case as always. I can explain that. Let us go and scroll through any random pair which you want. Say we go through any stock. Okay, for that case we go through this stock and we go through this instrument history, and let us see if it has any rectangle pattern. See, it is very easy, friends, to find the patterns. Just go to this pattern analysis widget and then try to locate any rectangle pattern. Now this is for history. Now this is rectangle 85%. Let us see. Okay, see, this was the rectangle here. Let us see if it is for giving us what we wanted. First, it should have a an uptrend. Yes, it has an uptrend. Then in an uptrend it formed two highs here. I just want to tell you that this high here and this high here is almost at the same level, and this low here and this low here is almost at the same level. So we can draw something like this. Well, I have drawn the lines, otherwise you could have drawn a rectangle, but before the rectangle is confirmed we need to draw lines only. Okay, in fact a bit higher. Yes, I think we should not take this high, but we should take this high into consideration. Okay, so you see, after this rectangle was formed, the price broke out of it but never came back to retest this. If you see, like I was saying, that you will never get exact textbook examples in the real life. The price will go and it may not even come back to retest the level of breakout. So there is a possibility that the price will keep going in that direction because there was too much of favorism, or there was too much of demand for the security. Okay, but yes, it eventually got its targets within almost no time, which was equal to the height of the pattern. It kept on going in the direction of the same trend. But I have a few precautions that I wanted to tell you about. First thing is that you have to wait for the confirmation before entering. Don't enter just because you want to enter. No, you enter only after the pattern is confirmed. Then after, you have to get out at the next level, which is considered as resistance in case of you are long, and if it is a support in case you are short. And you don't have to be greedy. Like here you have seen that, oh, pattern's target was achieved, but still the price kept on going in the direction of the trend, so I will keep holding. No, my friend, there is a very high possibility that the after trade taking this target, the price will go and may even come back, and an uptrend may be even converted back into a downtrend. Now, just now we have seen this example that after achieving in GBP JPY, after achieving its target, price banged down and then it started its downtrend. So you never know, it is still in a downtrend from that time. So my friend, you have to just get out in time, don't wait for too long. That's all I wanted to tell you about the examples in this. But yes, I also want to advise you that please bear in mind that the opening of trades is easier, just a click of sound. And I must request you that you should learn the proper risk management before entering any trade. And a special piece of advice from me is that if you put less than 1% of your capital on any single trade, then you have to open position in such a way that your stop loss, if gets hit, then you should not lose more than 1% of your capital. Now that should be your criteria. And if you have a solid 1:3 risk to reward ratio, then it will be very difficult for you to lose your money. If you take the trades only if you have a solid 1:3 risk to reward ratio, the probability of 1:3 risk to reward. So you ideally have to win only 3 times in 10 times in order to be profitable. Well, learn some risk management, and I will try to bring on some videos about the risk management, how to control the risk. In this video, thank you very much. In the next video, you'll see one more pattern. See you next time.